finish through the chapter lecture. We're gonna go ahead and go over some a problem, and then after that, tomorrow there are a few things I might not be able to get to, but we'll talk about tomorrow when tomorrow comes. But anyways, today we're gonna be looking about chapter 13, which is adjustments and year-end balances. Now, for this one, there are actually a few things why we actually use our adjustments. If you guys remember, there is one thing that I will be showing you, and it's going to be using the journal entry. Not only do we use the journal entry to make our adjustments, but we also use them when we first start our company, and we need to use that as an open balance journal entry, so then we can have all of our details matched up. So that's one of the actual cool things about this, is that not only do we we begin with a journal, we also end with a journal. So everything becomes full circle. And after that, I'll be showing you how to do the closing process. So again, if you're going to be following me with me, I am on page 395, and we are going to be doing the adjustment 18. Okay, so before that, again, we're going to be introducing to a few things that you will be looking at today, such as number one thing is a journal entry. Okay, so as you can see, there's a list of reasons why you would need to have a journal entry, right? One common use for the journal entry is going to be when you are making your end of the year or end of the period adjustments. So that can include anywhere from making adjustments to supplies, inventory adjustment. You can even do depreciation. Also, maybe recategorizing your expenses because maybe you accidentally forgot to have your classes in order, or certain transactions you didn't place your classes in. Other things too is going to pretty much allocate prepaid expenses. So when we have rent or prepaid insurance, usually that will be typically an adjustment you have to make, so then you'll be able to pay for the next period. And other than too, you also want to do non-cash transactions such as depreciation. Bad debt expense is definitely going to be one of those. Also closing out the owner's withdrawal, which we'll talk about towards the end of this chapter, because it really depends on what kind of company you establish yourself as. So here is the reasons why you would use a journal entry. And the last thing that we remember was from chapter 12. As soon as you build your company file and as soon as you set your chart of accounts, first things first is, if you are a pre-existing company or have a open balance from previous statements, this is where you also need to do a journal entry to complete all its opening balances for your company in order to start. So let's go ahead and talk about creating a general journal. So since all of you have newer students, most of you guys have some kind of accounting experience, a general journal is pretty straightforward. It's a list of two accounts, and you have a debit and you have a credit, and they must equal at all times. And of course, my older students, okay, so I'm going to make a funny comment. Like I said, like I told you guys, QuickBooks, you don't really need to do anything as far as doing this. This is the only time we will ever use a general journal. All right, it is the common way to also fix your mistakes as well. If you understand how the QuickBooks uses the items or the account to make a transaction, you can always fix your transactions using a general journal. Okay, so you're not completely you're not completely given up the idea of having to journalize anything. It is commonly used for adjustments for the company. So again, we're going to go to company on the menu bar. And of course, we're going to go all the way down to make a general journal entry. Okay. This is actually the only way you can actually get into the general journal. You need to go to company, file on the menu bar, not file, and you're going to click make journal entries. Okay. All right, it's going to give you this little display message, and we're just going to go ahead and say, okay. Now, the great thing about this is it doesn't really look like a journal entry. It looks pretty much straightforward like any form that you would fill out. But with this, that's the beauty of it, right? Not only do we get to do our little entries here, this one, for my older accounting students, you don't need to have indentations for this one. This one's straightforward a list. As long as you have the appropriate accounts and you properly place your debits and your credits in one, okay? And then for my newer students, you will understand how to do a manual general journal. There is some rules and how GAAP would like you to go ahead and make a actual journal entry manually. So there are a few rules and things that you may have to do. All right. Now, of course, the first thing you want to do is you definitely want to go ahead and make sure that the appropriate dates are correct. As again, we are looking into every time we open up QuickBooks, it automatically pulls up the latest in date, which is today's date or the date that you are currently working on the file. So I believe this was, December 2019? Okay, so December 31st, 2018. So these are going to be adjustments that we have to make. Here, when you make adjustments, it could be anything that you want to do. I'm going to do 2019-1, okay? And, yeah, so first account that's going to have is if you'd like to actually keep track of your journal entries, you would actually have to make a bank account called journal entries, and this is you're not going to be putting anything in there, but this is how you keep a record of all of your journal entries. You can place them all into one, and this is the location that you need to do. So before setting anything, you need to have a not general journal, but journal entries account number, so you can have your items or your journal entries posted there. Okay, it is not mandatory at all to have this, but it is a smart tactic to be able to pull up any adjustments or any journal entries that you may have already done, and at least you'd be able to know what adjustments you've already created. So that's the most important thing as far as recognizing the journal itself. You will never have or enter anything in the journal's entry account. Okay, no debit and no credit is going to drop in there. Okay. However, you can go ahead and title this journal entry, right, to recategorize was it recategorize expense? I think so. Recategorize expense. All right. Once you've completed that very first line, the next two lines are important. The next two lines is going to be determining which account you guys are going to be recategorizing. In this case, I believe the book says that we actually misplace a journal entry. We were supposed to actually place it into a specific account. So in this one, we made a journal entry and we actually combined all of the expenses into rent expense. But rent expense is usually a solid number, and your utilities, like your gas, water, electric, and telephone, usually that should be a fluctuating or separate cost because that's based on how much you use it. So in this case, I want to actually take a couple dollars out of the rent expense because I actually place all of my rent, all my expenses, including the utilities, into my rent. So I'm going to be actually not reversing, but I am going to just recategorize where they belong to. So in this case, I've already debited my rent expense, so now I need to credit my rent expense. In this case, it doesn't actually matter what order you place your debits and credits for. All right, so this is, you can have the freedom to do that. But general rule of thumb, you should try to make it as seemingly as possible and make sure that your debits come first and your credits come next. So in this case, we have utilities. Utilities is an expense because it's a $600,000, and we're going to be crediting our rent expense. Okay. Now, here's the nifty thing that's really cool about QuickBooks is, let's say I type in 2562, and down here I accidentally type in the wrong number. Let's say I put 2552. Oh, wrong, even wronger. 2652. Let's just say I typed in something wrong. QuickBooks is not going to actually recognize that. It's going to automatically pop up the difference and say, well, you need to place this 60 cent or 90 cent difference into an account. So this is going to tell me that this transaction will not let you pass through unless your debits are equal to your credits. So this is one way that it prevents you from making those mistakes. The only mistake that you would enter, obviously, is if the amount that you've calculated is inaccurate. All right. So in this case, it's 2562. I see here that I have a discrepancy, or I have a 90 cent difference. So I'm going to go ahead and go back here and I'm going to correct it. So this is 2562. So then again, this becomes 0 afterwards. Okay, now I need to clear these out. So there's nothing there. Okay, so that's what's going to happen, is that it will not let you pass through unless you have your debits equal your credits. So this is recategorize, right? Recategorize expense. Okay, and what class do they belong to? Does it say on the picture?
No.
No. There's no, okay, all right. So once you establish that you've completed this transaction and this is exactly what you want, then all you have to do is press the either enter, or you can make sure you go ahead and click the bottom, which is save and close. And you should get that beep of approval. So again, I've showed you that if you go to your journal entries, I'm not quite sure exactly, but why, but they've associated this journal entry as part of your bank account. It will make a lot more sense when we move into writing our $0 checks. which is the next section, but it makes more sense there than it does here in just our journal entries itself. But here is our journal entries account, and if I were to open it, here's my register of my last transaction. So again, I have my 2019 one journal entry. Again, it says split, but this is the one I did for for 2019. And if I were to click this, right, it would show me my journal. It will pull up my journal entry. Okay, so you can modify your journal entry for any given time, at any given for any given reason. Okay, just remember, every time you make a change to this, it will affect your books. So make sure that you do this properly and with your accountant's permission. But yes, that is exactly where you locate your journal entries, is by either going to your chart of accounts and using your option there. And I think you might be able to access it through your checking account too, since it's a bank. Here's your journal entry. You go ahead and click OK, and boom, here is your journal transaction. Okay. Now, when we talk about journal entries, right, we know that by looking at our journal entries, the one thing that is used for it is to recategorize your accounts. Okay, as you remember, we utilize accounts that exist in our company. All right. Now, what happens if we need to recategorize our expenses? That's where we're going to use a $0 check. Now, before I move on, does anybody have any questions in regards to making a journal entry?
No, ma'am.
Oh. What happened? Did he come in? All right, say hello to Mr. Sanchez. Good morning.
Good morning.
Hold on, someone's missing.
Good morning.
Good morning, sir. Good morning.
Morning. Good morning.
Anthony's missing. All right, Mr.
I was muted. I didn't realize. Hello, everybody.
All right. So, last we left off is going to be the journal entry for this. Okay. So again, as we use this for this example here, we are using it to recategorize our expenses for moving from one account to another. So again, this is a way that you can either fix your mistakes or a way that you can either fix your mistakes, or if you have an adjustment entry that you have to complete. So with that being said, no questions. Okay. So again, you want to make sure that you're very careful of what adjustment you are actually creating, because ultimately when you do a general journal, it is primarily involving your accounts specifically, okay? But that doesn't mean you can't stop there. So here I'm going to introduce you guys to the $0 check. This is used primarily to either recategorize your items. So remember when we talked about items is what makes up your sales process, okay? So maybe in this case, for this example here, we actually forgot to categorize or recategorize one of our items here, and we forgot to place a class on it. So it says do not do, but because I'm teaching this, I'm going to show you how to do it. Okay? So the first thing it says is you need to either write a check, or you can actually manually enter this into your check register. Okay? So in this case, I am not going to use a check register just because it is not technically the very, very easiest way to enter it in. So if you remember, what I did here was I went to my register, and I clicked my check register. I adjusted the very top part, and then I'm able to make a journal entry there. But in this case, it says it wants to show you by doing it using the write a checks window. So again, this is chapter 4. So here at the very top is where what I am talking about. It's automatically highlighted as checking. But again, we're not actually making a real check. We are making an adjustment entry. So make sure that you select the journal entry, and then it's going to give you a window, and you just click OK. So again, I'm going to make sure that I make this as 2019 101 because these are items now. I'm looking at items only. Same date is December 31st. And of course, who am I making the adjustment for? And then I'm going to go ahead and write Wong and Son. And because they are linked to this item right here, which is our photographer. Okay, in this case, it says subcontractor services. It is actually supposed to be for photographer. Okay, so one thing that you need to do too is you need to make sure that you're in the correct location. So here I am not in the correct location. I'm under expenses. Expenses only exist with accounts. I need to actually switch over and go to items. Items is again where we do our where we process our sales items. So here I'm going to photographer, and as I do this, I need one quantity because it's supposed to say 95, not 75. Okay. So I have one for 95 right here. And I believe, what is the class that it says here?
Nothing. We have nothing in the book.
Nothing in the book. Okay. So what's going to happen here is now that I've created an item, right? Here, I am essentially trying to use this item, but I need to either recategorize it, or I'm running a $0 check, allowing myself to make an adjustment from one item to another, okay? Or either relocate them. And in this case, what you're going to do is you're going to actually do a second line item, okay, with the same exact details. Okay, so again, this does say 95. Okay, you want one of those, but the thing is that you need to do is you need to make a negative number here. Okay, and then once I've done that, as you can see, it's going to actually make my check 0. Hence the name of this reason why you're making this adjustment. Now, I believe you do have to enter in a class for the second one. It's supposed to be San Jose, but in this case, it's not going to be. So here, again, we do the okay, so we're recategorizing. Okay, sorry. It says I'm supposed to have not the same item. One is photographer, and the other one is retouching. Okay, so this is because I accidentally charged photographer as the item. So now I'm making an adjustment by saying it's actually supposed to be retouching. And how many retouchings do I have? I think I have. Okay, it doesn't give me a quantity that I'm supposed to be putting in here. So this is just me subtracting out from my photographer, and actually replacing it into my actual retouching instead. Okay. So it says I'm not supposed to have quantity in here. Okay, my $0 is still $0. So this is just because I made a mistake and I charged Wong and Son for a photographer, but in reality, it's supposed to be for retouching. So once I've done that, that means it's also going to subtract out from Wong and Son's payment. Okay, so the one thing that you have to make sure is that your check is going to be 0, and we're just replacing our items and making adjustments here. And I'm going to go ahead and click Save and Close. Once I do that, again, because I actually placed that item in my account, there you go. So General Journal entries, here you go. Now I have this one right here, my actual General Journal check right here, and it is for the Wong and Son adjustment right here. All right. Any questions in regards to using a $0 check? It's a little weird. It's hard to explain, but it's just basically if you made a mistake or you need to make an adjustment at all for inaccurate charges or XYZ, then this is how you do it, especially for items. Accounts is a direct general journal. Any questions?
Losing connection.
You're losing connection?
Yes, suddenly signal getting slower.
Okay. All right. So any questions in particular to this journal entry? So again, we will take a look at it in a bit. I believe we are going to be looking at trying to modify a particular item. So back to the home page again. So again, when we start our company or start our business, usually you need to have that open journal entry. Okay, so that is actually all for the adjustments that we're going to be looking at. So again, it could be one of those 5 or 6 items that we looked at on the very first page. It could be for when you make your non-cash transactions, such as depreciation, when you make adjustments such as let's say you're at the end of the year and you need to write off bad debt and you didn't use the proper method, you can always adjust it that way. Other things again is in case you needed to adjust, recategorize or make your journal entries. Maybe something is up with your balance. And then at the very end of the chapter, I'll talk about the last section, which is zeroing out your equity accounts into you zero out your income, your net profit into your equity. So if there's no questions for that, okay, then we're going to move on to the next one. All right. So next thing is going to be editing, voiding, and deleting transactions. As we know, QuickBooks is going to set one thing and one thing only. You should never delete your transactions, okay? Unless you've made a really big mistake or something that you want to undo. Well, they say you can delete it because that's what QuickBooks allows you to do. But the number one thing that you should also check to make sure too is that you validate it through your accountant. And also, the best way to delete something is just void it. All right. So yes, you can void transactions at any given time. Okay. Also, one thing I forgot to mention too is when you're making your adjustment entries, the rule of thumb is always do it before you close out your books. Now, yes, and if when we talk about the accounting cycle, there is a section, right? It's going to be step number 6, to enter in all of your adjustment entries. So that's already part of your accounting cycle. It is something that you need to do before you close out your books. But in this case, they always recommend that you make your adjustments just to make sure that when you do actually change something in regards to your company, that you make sure that you also check to make sure that it is a correct thing to do. Okay? So again, it has to be done before you complete the closing process. Okay? So again, editing, voiding transactions. Again, this one, they just recommend you to just try your best to void your transactions versus deleting them. If for any reason, like it is like a minor transaction, let's say you did accidentally charge the wrong amount, then yes, you can delete it and redo it again. But they also give you the option to adjust or etc. etc. So in this case, we are looking at how to either edit a transaction, okay? So for example, in this case, you actually forgot to charge a customer for an outdoor photo shoot. You only charged them for one service, but you forgot to add on this to their invoice. Now, here's a rule of thumb here. If you have not sent out an invoice, then yes, you may go ahead and edit this transaction because it's going to increase your accounts receivable, XYZ, and it's going to, it's going to change your income and your expenses at the same time. Now, if you've already sent out your invoice, usually what's going to happen is they typically say they want you to send an invoice out for the difference of your of the mistake that you've done. Now, as far as my best recommendation for you is you should actually just void the entire invoice and create a new one, because some customers are going to be kind of questioning why is there two different invoices and why are they for two different amounts, where, best way to, kind of, apologize to your customer for making that mistake, and you should actually just send them a new invoice including the new with a new amount, so then the customer knows instead of paying for this for invoice number 1 and invoice number 2, they're actually just paying for just invoice number 2. So you want to be very careful, especially when you've forgot a transaction and you just tack on to another one. So you want to be very careful, especially when you don't want to confuse your customer on the items that you are supposed to be giving them. You want to make sure that they get the correct service and they get the correct items that they've ordered. So in this case, we forgot an outdoor photo shoot. All right, so this one says that we're going to go ahead and go to our customer menu and we're going to create an invoice. So again, this is assuming that we actually have not sent out this invoice yet, and it's still in our system. Okay, so I'm gonna go ahead and click instead of going to the customer center, I'm gonna go right into the actual homepage. And in this case, they say click the previous one, and I do. Now, is this the same one that we're looking for? Yes, we're looking for 2019-106 invoice. So this one, here it is. They got a premium package, but no photo shoot service. So here you go. I'm going to go ahead and tack on my outdoor photo session. And I believe he requested 3 of them. So notice that my amount was for $371. Now it is going to change to $561. Okay? So for every single item that we have here, again, it's revised, and now your invoice should look exactly what it says. And this is tacking on another you forgot to add on an item, so this is tacking on another item and resending the bill. So again, my best bet for you is to either void, undo, or cancel that invoice and recreate a new one, just because or in this case, when you make the adjustment, send them a new invoice. Never send them a difference, because it just confuses the customer. So you just want to make sure that they understand that. And by you adjusting and making changes to this invoice, you're not essentially creating a new invoice with the same information. You're just editing the one that's already existing. So you're not making another double charge to your to the company. You're just editing and modifying and increasing what has already been done. So in this case, I've already made my adjustment. Same thing, everything looks good. And I'm going to go ahead and click Save and Close. And it's going to give you a window saying this transaction has been modified, and you say yes. I want to have those changes on there. So again, that is what you do when you make edits to invoices. And you can make edits to pretty much every transaction that exists here. And we obviously know how to do that, right? Especially when you go to a customer center. Usually they're dealing with invoices, so you can select an invoice and you can go to, to view all of it. And by modifying it, you can just double click on it and make any changes to it at any given time. Okay? Rule of thumb is you shouldn't do it, but that's okay. All right?
Question.
Yes.
What, in reference to that invoice, what if the customer has already paid that first one? Will you be still issuing the same invoice, and then you'll just have to subtract that payment so that it would show the difference?
Yes, you can do that. For that cases, if your customer has already paid for the pre-existing invoice, what you actually have to do is send a completely brand new invoice with the adjusted amount. So in this case, you actually would have to do 2 separate invoices, just because, again, if you were to do that, it's also kind of messy on your end that you didn't make the adjustment in the beginning, and you had to wait till after the payment was made in order for the invoice to go through. Now, for if, let's say, you found the mistake as the next day after you sent the invoice and your customer decides to pay, but you sent them a new invoice. Then if they communicate with you and say, hey, I already sent a check for this amount, just accept it and I'll pay for the rest. Okay? So most cases, it's usually the customer that points out your mistakes more than the vendor itself. So customers usually say, obviously, if they are supposed to be charged or something, some people are pretty okay about that, or they're very they're very, what, I don't know how to explain it, but their morals tell them I need to tell them that they did not charge me for the right amount, or they overcharged me, or XYZ. So if they do that for any reasons, they do make that. If you, let's say I sent out an invoice and I overcharged, I can also do the same thing too. I can either resend them a new invoice with the correct adjustment, and they will get a new invoice. Okay, so this applies for both, if in case you forget something and if you overcharged. So making the payment, obviously the correct answer could be whatever your company wants to do. But I would say most likely, if you have written an invoice and they have paid it, general rule of thumb is send them a completely brand new invoice with a new amount on it. Okay, hopefully that answered your question.
I got it. Thank you.
Okay. So, of course, if you go to the very top over here, you can void this invoice. So for any reason that this invoice, let's say you are just in that kind of mood where I want to send them a completely brand new invoice with all these extra details and information, then yes, you can actually avoid this invoice and start all over. Okay? When you void a transaction, all it does is it keeps the information there, but it just zeroes out the account. So I'm going to go ahead and show you this example here, right? Because we have this for the Kumar and Sadi. If, let's say, I go ahead and void this invoice, right? Now, if I go ahead and exit out of this and I go to the customer center, okay, so it's this one. I void this thing. Now I'm going to get this exact one right here that says, this is the let me just make sure I double confirm this. If you look here at my Anderson wedding under Sadid and Kumar, that's the one I just changed, right? And, or was it the Sarah? I think it was it the Sarah? I think it was Sarah. So if I would go ahead and double click this, it's pretty much a voided transaction. Everything gets zeroed out, as you can see, right? Because I voided this transaction. Now, once you void a transaction, you are actually unable to undo it. Okay? You cannot undo a voided transaction. So that means since I voided this, what it does again, it zeroes it out for you. And what's going to happen is you're going to actually recreate a new invoice, right? As you can see, you can duplicate the invoice and be able to charge for whatever amount. So in this case, it zeroes it out. So then that means it pulls it out of the accounts receivable. It's as if this transaction has never happened. Okay? And that's what you can do too. You can void it, and instead of deleting it, voiding is always recommendable over deleting. Because then here, it shows that you have some kind of paper trail here. It says that here you did try to attempt to charge Anderson wedding, Sarah, but you voided it. And what's going to happen is, because especially when you keep this information in your QuickBooks, yes, it's going to clutter, but at least you have some kind of paper trail of your transactions. Because if you are voiding a transaction, the number that you assigned cannot be used again. All right? So you want to make sure that you don't have holes in your items either, in your list, but you definitely want to make sure that when you do void a transaction, that it's still there. And you can pull up a report on all your voided transactions. Okay, and we and you get to see that I forgot which chapter, but I think it might be in this chapter. So that's just voiding transactions right there. Okay, but in this case, I've already showed you when I edited an invoice. Okay, so here's a little information here that it says that you may have to, again, strong recommendation is to only edit the information if the invoice has not been sent out yet. But again, I've already explained if you have sent it out already, most customers would want a brand new invoice that has the correct amount over sending a separate invoice that has two different amounts, because you could definitely confuse a customer there. All right, I got to show you how to void a transaction, and yeah, next one is going to be deleting. All right. Now, question to you is, remember, as I've mentioned many times, never delete your transaction unless you are currently going to be starting a new period. Okay, so starting a new accounting cycle over again. So with that being said, there is this one option where you can actually delete your transactions and delete every single one except your customer list and all that, etc. So you get to keep all your lists and all your preferences, but you're actually just removing all the transactions. This concept right here typically happens especially when you close out your books. Once you close out your books and you're creating another company file or a separate one, you definitely want to make sure that you do have this when you want, and you can delete all the transactions so you can start your accounting cycle at a fresh point. Now, a general rule of thumb is most cases, often nowadays, companies don't do their reports until either at the end of the month or quarterly or even annually. So in this case, this is not a section that you would often use. It's only a monthly thing when you start cleaning up your transactions. Because if, let's say, I am on monthly, right? Let's say I finished up and wrapped up all my transactions for March. Once I've done that, I've completed all of my stuff, including, which we'll talk about in a couple minutes, which is the closing process. There are actual steps that you need to take. So once you've completed that and you decide to set your closing date, you're going to back up your file. Once you back up your file, right, and you've created what you needed created, and you're going to have that file in a separate location, as you're in the working file now, you're going to change the corresponding closing date, because now you're going to be starting the period all over again. You are going to have to actually clear out all of your March transactions, so then you can actually start from the beginning of April. That way, it reduces the clutter in your transactions. You only leave minor transactions that roll over into April. So any last minute or end of the month transactions. Now, usually QuickBooks will keep all that information for you if you do this option here. And it's going to be the utilities option, data cleanup. Okay, so again, if I go to my F2 right now, which will give me a list of how many items I have on here. Oops, I clicked F4, excuse me. So F2, it gives me a list of everything I have here, and it tells me that I currently have all these names in my book, and I have currently all these transactions that I have. Total transactions, I have 30 transactions. So by me wiping out the information on here, I'm keeping my name. So that means I don't have to start my company file all over again. Because again, that would be defeating the purpose of what QuickBooks does. It's supposed to facilitate and make it easier for you to enter your transactions in. So it will keep all the names and stuff in here. However, it's going to get rid of all those transactions that you just saw. So you're going to go up to File. You're going to go to Utilities. And you're going to do the condense file. So let me go ahead and find it. Condense data. Okay. Once you select that, it's going to give you a window. Okay, well, if you are going to do that, you need to save it. So this is where you're backing up your file and you're saving a place so in case you do need those information again, such as your transactions, you have them. Okay, so in this case, I'm going to go ahead and click cancel just because I'm still needing to show you a few things. So I'm going to go ahead and click cancel. But that's what you do to try to clear up all of those 30 transactions, but keep all of your lists and your balances, and as well as your items list, as well as your a chart of accounts. You keep every single detail. Only thing that gets rid of is just your transactions. All right. Any questions in regards to that particular little section there? Okay.
So, Miss Lynn, are you saying that it won't mess up your books if you delete these transactions?
Okay. So again, it will not mess up your books if you've created a company backup, which is exactly what it asks you to do before you wipe out all the transactions. So again, when you're doing this, it's very important that, especially when you're dealing with a major company file, you want to back up your data a lot. And when you create backups, you're creating essentially another file. So that's what the thing about QuickBooks is. Every time you create a backup file and you close out one of your books, you're not deleting the existing working file itself. Okay, you're creating a bunch of company backups and you can save that in another folder for your accountant. But you're constantly going to be utilizing a working file all the time. So, okay. And again, like I said, it is tedious if you have to enter in all of your information all over again. Might as well don't even close out your books. So yes, by utilizing this thing, it does make you save a copy somewhere. Okay.
I understand now.
Mhm. Mhm. So it does. Yeah. Yeah. As long as you save it, so you can manually back up your company file at any given time. You can schedule it. But definitely when you remove your transactions, it gives you an option to save it, a place to save it. Okay. Any other questions?
Thank you, Lynn.
Mm-hmm. Any other questions?
Not for me.
Okay. All right.
No, I got slow connection.
Yes. Okay. Now the next section here is going to be looking at memorized transactions. So, again, QuickBooks is going to try to make it as easy as possible to enter in information. And even better, it allows you to memorize transactions, and every time you fill in a form, it will pull the information automatically. And again, that is going to allow you to have an extra 10 seconds, I guess I would say, or an extra minute for you to save on every transaction that you can do. So again, you can memorize the following transactions, which would be your journal entries. So if you have an end of the year adjustment, so if you're using, for example, straight line, okay, and every year you have the same exact transaction, you can save that into your journal entry. A common one to use for this particular one is going to be any bills that you receive. So a good one would be for every month that you have to pay for rent. Typically, rent usually stays the same after a couple months, but then as property management and the longer that you stay a resident there, they start charging you more every year. Okay, so again, but still, because they're going to give you a constant rate or a constant bill, that's something that you can memorize. So every time you open up and you need to pay them, it should automatically fill in the information for you. You could do that for an invoice. Okay, so for those returning customers, if they seem to buy the same thing over and over again, or those customers that say, hey, just get me the usual, then you already know exactly what they're going to order. So that's something that you can memorize as well. So invoices, sales receipts, bills, and other transactions. Things that you cannot memorize, okay, this is important, will be things such as bill payments, okay, paychecks and receive payments, okay. And this one's pretty obvious why you can't memorize it. First off, you never know how much you can afford to pay somebody. Okay? You may be one of those people that pay a portion and then or do multiple checks and try to pay a vendor as soon as you can. And on top of that, a bill can be typically not the same unless you have some kind of trend, such as I buy this exact amount of items every single time, so my bill should be the same. No, you cannot memorize a payment because, again, you have to know how much you have and be willing to pay. Same thing with paychecks. Not every employee is going to be coming in all the time. If you allow your employee to take sick days off, well, you can't pay them for those sick days off unless you allow it. Okay? And sometimes with sick pay, it could be not what you actually earn. It could be half the amount that you earn because you're not really working. All right? Salary-based people, typically they do supposed to get the same exact paycheck for every paycheck that they get. However, you can throw in a bonus this month. You can, maybe they got a raise this month. So there are a lot of factors why that is going to be very, very variable and also be fluctuating. Same thing with customer payments. You can never predict what your customer is going to pay you. Someday you'll open up the mail and you're like, what the heck? You only paid for half of this. You only gave me $20. You only gave me this much. Oh, you gave me a check that paid too much. You overpaid me. So you would never ever expect that you could predict your customer payments. And again, this also falls true as well as when we deal with bad debt. You can also assume that your customer does have a chance to not even pay you at all. Okay, so those are the three things that typically you cannot memorize. But we'll go ahead and take a look at this example here where we get to look at Sergeant Insurance. Okay, so I'm going to go ahead and enter this bill in because that is what it says. It says to create a bill and enter the information below. So again, I'm going to take the easiest way, which is right on the home page, and I'm going to enter a bill. Okay, person I'm entering a bill for is going to be Sergeant
Sinclair.
Sinclair. I'm sorry. Sinclair Insurance. Okay? Once I pull this information, now I need to fill in the rest of the information down below. So in this case, I believe, what kind of insurance is this?
Yes.
Insurance expense, it all exists
Okay,
here.
insurance expense. Here you go, insurance expense. And now it's going to ask me to enter in an amount. 600 was it?
Yeah.
All right. And memo here is, oh wait, no, sorry. Insurance.
Payment.
Say that again?
Monthly insurance payment.
There you go. Monthly in okay. Once I've done that, right, I've entered 600 and all this stuff here. Okay, and is there a specific class that I'm assigning this to? I don't think there should be one.
Nothing.
Okay. So here I'm going to validate this one. But also, if you go here, they do have the edit menu. They usually go to edit, and you can memorize this transaction or memorize this bill. Okay. The other shortcut that you can do this to is right on its actual form at the top of the window. You have it right here, memorize. Okay. So if I go ahead, I'm going to go do this one, and it's going to give me this window. I need to title this this bill, so then every time I look at my memorized transactions, I'd be able to pull up the information, or you know, when I type it in again, it will automatically pop up for me. So in this case, I'm going to name this as insurance. What is it called? What am I supposed to name this?
Insurance payment.
Okay? That's going to ask you a few questions. Do you want to add this to my reminders list? So, are you going to have this as a reminder to make a payment to this person? Yes, that would be great. You can either don't remind me or automate transaction entry. I definitely want that to automate the transaction entry. In your book, usually it should tell you what it's to do for when you do actually click on this section here. In this case, it does say automate this transaction. So again, it's up to you if you want to set it as something you want to do, but I want to automate this transaction. Other things that I want to do is, do you have a specific date? How often do you get this? I'm going to say I do actually get this every month. Okay. And when is the next date? So in this case, what does my book tell me?
215.
2/15 is the next time I'm going to receive 2020 or 2019?
2019.
Okay. So that means I get this at the middle of every month. Okay. And then days in advance to enter. Anything there? Number of reminder remaining. Say it again.
11 days number remaining.
Okay. Perfect.
No.
Oh,
Number
so
remaining.
11 days for the days remaining, and then 0. Okay. So this is just setting up bars and like reminders remaining as well. So in this case, how many is remaining is going to be how many months left of insurance is remaining. So in this case, I'm putting 11 months because, again, just how insurance usually typically works is that you actually are paying for either a whole year or you actually are making a monthly payment. So in this case, I've already paid for the month of January, and I need to complete my payment in February, March, April, May, June, all the way down to December. So in this case, I'm going to go ahead and click OK. And now it took a picture shot of this exact bill here. Now I'm going to go ahead and just, let's do an example here. I'm going to say that I received this on January 2019, of course. I have to go all the way back in time. Okay, and let's say I received this January 15th. Okay, reference number 2019, 101, 600. So here's my information here. I'm going to go ahead and click save and close. Okay, now once I've done that, next time I enter in a bill, and let's say I type in the same person, Sinclair, right? Once I've done that and I do this, it should automatically pop up all the information except for, I think the number's supposed to carry over too, but in this case, it didn't. So then in this case, it filled out all my information saying, okay, well, at least you're expected that you need to pay rent, insurance expense. Again, I don't know why I didn't save the number. It's supposed to save the number. Okay, but I can go ahead and modify this and say, well, this one is for the month of February 2019. Okay. So that's usually what should happen, and you all you have to do is just type in the name and it would fill in the transaction for you.
Question again.
Yes.
I'm sorry. So, how would you differentiate then with between that automate and add as a reminder? Because reminder would just be that's when you will be inputting all those information, while the automate transaction you already have set up completely all the information. It's just a matter of updating the date.
Um, I mean, like this one, you should definitely do automate the transaction because you can always set reminders again afterwards. So the reminder is just going to, is QuickBooks is just going to send you a little notification saying, hey, don't forget, you have a bill that's due soon and it's for Sinclair Insurance. So that's all it's going to tell you.
I see. Okay.
It's not going to tell you when it's due. It's not going to tell you, it's not going to tell you the exact amount. It's just going to give you a friendly reminder to enter in another bill and create that. Okay. So once you've done your memorized transaction, in order to relocate them, you are going to go click your lists and you have your memorized transaction list. So again, I only have one, and you can actually make changes by either editing the memorize or deleting it. In this case, I'm going to go ahead and try to edit my information that I have here. So again, it just pretty much shows me this window here. Okay. Okay. And here, if I double click on it, here it shows me this bill that I memorized. Okay. Again, it's supposed to be memorized for $600, but that's why I'm trying to say, like, sometimes it just won't activate it. You may have to type it in. But in this case, this is what I memorized this day. So, and you can edit this. Let's say my insurance for every month went up. It increased to $650. Then you can go ahead and make changes here. Now, in this case, I believe, yes. So right here, I'm in the edit window for the memorized reports. You can make changes and save them. Or in this case, you can re-memorize. Okay? And I believe that's the next portion here, is to re-memorize or edit the information. Okay, so select the memorized transaction list, and then now we're entering in something else in here as well. What changes are we making to this one? Let's see. Let's see. or on the edit memo. Let's see. All right, so I believe this one, it's asking us to actually clear this number here, or you could actually click clear and save, and either save it or delete it. So this is what I'm gonna do. I'm gonna go ahead and clear the information. All right, it's still going to be Sinclair. Okay, and information, I'm just gonna keep this at 0. Save and close. Okay, so every time I edit this, it will still reflect as 0. Okay, whoa, it still kept it at 600. Okay, it's supposed to change it. It's supposed to change anything that you want to change in there. So again, I actually right clicked it and click edit this information. So maybe it could be to the reason for this too is, let's say you add something else to the insurance. Maybe you need to split the insurance, and you should be able to do that by double clicking on it, and then once you've made your changes again, you go ahead and click memorize. So let me go ahead and do this. Let's see if it will do it that way. Let's say I put 0. Okay, instead of save and close, you're gonna click memorize. Okay, and then it says right here, insurance payment is already in the memorized reports. Okay, would you like to replace it? And yes, I'm gonna go ahead and click replace. So the next time I actually look at this transaction, it's going to actually change it. So if I double click on it now, it's going to reflect as 0. So I need to re-memorize a report. You can't save any changes. Unfortunately, it doesn't register or recognize it for some reason. You need to actually re-memorize it. Okay, so that is one way of making changes to this. And of course, if you don't ever use this item, you can right click on it and delete the memorized item. And I'm going to click OK. So now I no longer have anything memorized. So again, you can pick and choose what transactions that you commonly place in here. QuickBooks is not going to recognize or have a, whatchamacallit, it's not going to automatically fill it in every single time you enter a new transaction. It's not going to associate anything. So you are going to have to utilize the features that are on QuickBooks to help you be able to do this. So for example, remember if you guys learned in Excel, when you type in something in an Excel form, right? The more you keep typing it, Excel's going to recognize, oh, do you mean this? So it autofills it for you. QuickBooks does not do that. Unfortunately, you would have to memorize the report in order to do that. Okay. All right. Any questions in regards to memorized reports? So again, to access it is going to be under the lists, under memorized reports. Okay. And again, you can only memorize things that are, transactions that seem to be more commonly available to you, such as invoices, such as sales process, even purchase orders are going to be something that you can memorize. But remember, you cannot memorize bill payments, paychecks, and receive payments. Okay. So again, I showed you how to delete it as well. You have to actually right click it and delete it. Any questions? Okay. So we have one last section here, which is going to be introducing you to how to properly close out your either year end or any given period, of course. Okay, so again, typically most companies, when they close out their books, it could be either monthly, quarterly, or an annual thing. Now, for this one, high recommendation is it's best to close your books out properly, like do the very very last section, usually typically at the end of the year. Um, because again, that will make it easier for you to file your taxes and whatnot. But you definitely want to close your books up if you are doing a month to month basis. You definitely want to try to be organized and instead of having to do it at the end of the year, it's better to just try to do it as soon as you can, which is at the end of the month. So again, when we are looking at this, okay, there are a few steps that you need to do, which is going to be here on page, 407 to 408 is going to be the list of things that you need to complete when closing out your entire books. All right. First couple steps is obviously going to be completing your depreciation entries. Okay, that's the first one. That's the first adjustment that you are going to do. It's a non-cash transaction. So again, if you have fixed assets, you 100% are going to have to depreciate no matter what it is. Okay. Other things too is going to be adjusting your cash by doing reconciliations, which we learned about in chapter 5. And other things that you could do too is also adjust inventory, which we learned in chapter 8. And then, of course, you're going to be also doing adjusting any accounts that are accrual basis. So things like prepaid insurance, any of those things are going to be considered adjustments. So that's going to be making your journal entries. And then, of course, you are also going to distribute your income. So this is where I'm going to talk about to you right now after we talked about the 10 steps. So this is where if when you establish yourself, whether you're a corporation partner or a small business LLC or a sole proprietor, this is where you're going to have to either distribute your profits, reinvest into the company, or I think that, yeah, those are the only two choices. You either distribute your profits or reinvest in your company. And we'll talk about that in a couple seconds. Then step number 6 is you're going to run all your reports. So all your financial reports, meaning your trial balances, your financial statements, which include your profit and loss, your statement of cash flows, as well as your balance sheet. And then step number 7 is to either print them or create them, save them as a PDF. And then number 8 is going to be making sure that you back up your company file. Step number 9 is using that step number 9 is going to be setting a closing date, which allows you to lock up your data. And then step number 10 is going to be actually utilizing the cleanup data condensed thing that we just talked about. So here is going to be a list of pretty much standard procedures that you have to complete before you actually close out your books. And the most important ones is going to be doing these adjustments, which again, throughout this entire book, I did show you how to complete every single one. So first one is going to be your adjustments. Second one is, bank reconciliation, inventory, etc., etc. Okay. So I'm going to talk about step number 5 in a second. But any questions in just properly closing out your QuickBooks? So these 10 steps are very, very important to know how to do because you will have to do it eventually, depending on what your given period is, whether it's monthly, quarterly, or annually. Any questions?
And these would all be journal entries, correct?
No. So only the first one and I believe the fourth one are going to be your journal entries. So anything that is, again, if you go to the very beginning of this chapter, I think it's 399 or something, there's a list of the journal entries that are going to be used to make your adjustment entries. So depreciation is definitely one of them. Okay. Step number 2 is from chapter 5, doing the bank reconciliation. Okay. And then step number 3, we've already looked at how to adjust our inventory by taking a physical count, and you're not going to use a journal entry, you're going to use the inventory valuation entry. Okay, so that's chapter 8.
Okay.
Okay, so it's a lot of mix of what we just learned throughout this entire class. Okay. Any other questions in regards to how to close out your books? So you definitely want to use this as a checklist, and making sure that you properly understand how to close out the books, especially in QuickBooks. Okay, so we have the accounting cycle, which we'll learn how to manually do it, and this is how you do it in QuickBooks. Okay. So going back to step number 5. Okay, so when we go into accounting, okay, we will learn that when you close out your books, you're going to it's a step-to-step process. You're going to zero out all of your revenues into either income summary, or you're going to zero out all your expenses into income summary, and then the very last step is to if you reinvest into your company, you're going to take that income summary and you're going to place it into your equity account. QuickBooks does this for you automatically at every given transaction that you create. So you do not ever need to place this information, or you never need to make an adjustment entry to zero out all of your accounts and place them into equity. It automatically does it for you for every transaction that you complete. So again, it also depends on what you are. If you're a corporation, you have what's called retained earnings. And what do you do with the retained earnings? Most oftentimes it's either you distribute them through dividends, or you actually reinvest it into your company by transferring your retained earnings directly into your stockholders' equity. If you're a partner, it's more or less the same, similar to sole proprietor, except you're actually distributing the profit amongst your actual partners. All right, and your partners then choose to either reinvest it into the company, or they choose to keep the profit. As a sole proprietor, your only option is, for QuickBooks, is you're going to reinvest into your company. And how you either pay yourself or take money out of is by completing the owner's withdrawal. And for that one, you have what's called an income summary. Okay? So it just depends on what established organization you are, but they all fall under the same fundamental lesson at the end of the day. It's the same concept, because what you're doing is it's just a different name. Retained earnings is the same thing as income summary, which is the same thing as partners' income, net income. All right. It's just what you do with that money, whether you reinvest or not. In this case, QuickBooks automatically reinvests into your company, and what you have to do is you have to make adjustment entries to either distribute the profits, take the money out, or distribute to your stockholders' equity, your dividends. Okay, so it automatically does it for you. Okay, so when you close out your books, it will automatically transfer all the information to the very next period. So with that being said, we just eliminated the closing process itself. That's why I want you guys to make sure that you utilize these 10 steps, because the closing process in accounting is slightly different than the closing process in QuickBooks. Okay. So here we're going to be looking at how to do our closing entries for a sole proprietor. So again, if for any reason you have or need to pay yourself, because as a sole proprietor, right, you and the business are one. Okay, meaning that means the money that you invest into your company is going to be the money that you actually own. It's your company. You could do whatever money, whatever you want to the company. You can drain out its money if you'd like, but that's obviously not the smart thing to do. Yes. So how we actually distribute profits or have the sole proprietor be able to take a chunk of the profit is by having a withdrawal. Okay, and we will look at this in both accounting class. So those who were in my accounting class, you need to complete this entry again. Same thing. So once you've closed your books out, close all your expenses out, close all your revenues, and you close out the income summary to equity, the last thing that you need to do is you need to close out any withdrawals out to equity to readjust the value of your company. All right. So in this case, I'm going to debit. In this case, I'm supposed to credit. I'm going to no, actually, I'm sorry. I'm going to debit my owner's withdrawal and credit my owner's equity. Okay, and that's going to reduce your equity account, and it's going to, you're taking the money from the company. Okay. And there's the best way to kind of do this is to actually write yourself a check from your checking account. So usually when you do your withdrawals, that's usually how you do it first. You are going to write yourself a check, and your account that you're going to be taking it out from is going to be owner's withdrawal. And then at the end of the day, this is how you make the adjustment to reflect that value in your company, because you're essentially taking money from the company. So you do this entry. I'm not going to do it because I don't know if I have an amount in my equity account, in my withdrawal account. So I'm just going to leave it as is. And this pretty much shows you the 3 different ways. So if you do have a partner, or you do establish yourself as a partner, depending on what your profit percentages is, usually if it's 2 partners, it could be 50-50. If it's three or more partners, you can distribute as 40-40-20, whatever it is, because again, partners, there are 2 types of partners that you can have. Either equal partners, or you can have silent partners. So you may want to look into that as well. So you may, if you are doing that, you will have what's called partners draw or partners equity. It's essentially all the same. Okay, and I'm just going to skip this section because it really depends on how you establish your organization. So it doesn't really matter which one I teach you. Okay, so I'm going to skip all this section right here, and then we're going to go ahead and take a look at the last section here, which is actually looking at how to properly close out your books. So there's actually only one way you can set the closing date. Okay, so if you guys vaguely remember, on day number 3, I believe we started when we did chapter 12, our first, or not the first question, but in our Easy Step interview, we were asked to set a closing date. Now, because we are working on this file as of 2020, if you set the closing date, your QuickBooks will automatically lock up. Okay, because we've already passed the closing date. You're not supposed to be entering information beyond the closing date. So that's why usually when we teach this class, we tell our students to set the closing date towards the end of the year. Even QuickBooks recommends that as well because, again, you never know when you're going to be closing your books or when you're going to be utilizing it, especially if you're using QuickBooks to retroact all the transactions that you did in the past and match up your statements with. So if you plan to do that, you never want to set the date until towards the end. So again, so it tells you here that you want to do it towards the end of a given period or given time. Okay, always set it towards the end. But I'm going to show you how to set it in the first place. Okay. So when you've done and you're going to set and close your books, obviously we looked at the 10 steps. Step number 9 is, or step number 8 is you want to back up the company file, save all your transactions first, then go ahead and do setting the closing date. So in this case, in order to set the closing date, it is going to be going into your preferences. So you're going to go to your edit window and you're going to go to preferences. I believe the second way you can do is you go to your company and might be able to set your closing date here as well. Right here, set closing date. So company on the menu bar, okay, and set closing date. When you do that, you're going to essentially get the same exact window. So let me go ahead and do this. So this is your edit preference window. Okay, so that's the exact thing that we just did here. So again, I'm going to go to edit preferences. Okay, you're going to go accounting and you want to make sure that you're in your company file. Okay, so the easiest and quickest way would be going to your company file and setting the closing date. As you read through here, it's going to be the last section here under closing date, and it says, so let's go ahead and set the closing date. So when you click that, you're going to get this little window, and you're actually going to set your closing date. Pretty straightforward, okay? So there are a few things that you may have to look at, such as what is your closing date. So in this case, I want to set it to December. I guess for this example, if I want to just say I want to set it for the 31st of 2020, then, I'd still be able to work on it until the closing date comes up, okay? But in this case, they want me to do, to close out for to 2019 for the December date. Okay, and then once I click that OK button, that's it. It's locked. Okay, and it says I have to set a password. So for this one, I think it's like what, ABC1234. ABC1234, and it tells you to confirm it. ABC1234. So that means because you are the admin and you are setting up this password and closing out the books, just know that that means if you make any changes to an existing file that has been closed out, you need to have a password to be able to edit the information. And again, one thing they always say is once you close your books out, that's it. You do not need to go back and edit it for any reason, okay? Because then ultimately, if you make any changes to the closing process or anything that's in these transactions, unfortunately, you will, of course, have discrepancies in most of your transactions. So usually general rule of thumb is once you close your books, that's it. You leave it, and that's for the accountant, your tax accountant, to be able to, audit your transactions and etc. So there you go. You just set the date for whatever date it is. And I'm just going to go ahead and click cancel because I believe In this section, it tells you to also cancel as well because we will be utilizing this again for our problems. Okay. So, and that's it for chapter 13. Any questions in regards to anything that we learned up to for chapter 13?
And so forth.
Okay. So let's go ahead and review these questions. Okay. So select the best answer. Okay. So number 1. Okay. Which of the following tasks does QuickBooks perform?
Slow connection.
Say that again.
Get a slow connection. Letter E.
Letter. Which letter did you say it was?
I think it's gonna be my answer. It's gonna be E.
Answer D. Okay. Okay.
C.
C. Okay, so the answer is C, as in cat. Okay, because A, creating adjustment entries. You actually have to do that yourself. You actually have to input those journal entries, so it doesn't automatically do that for you. B says to identify expenses that are too high in the comparison with the prior years. How do you do that? You have to create a report. So you have to physically analyze your reports yourself. QuickBooks is not going to identify that. C says adjust the balance to in the retained earnings account to reflect. Okay, yes. So as I talked about this about 10 minutes ago, QuickBooks automatically adjusts your retained earnings to reflect the next year's with the adjusted amount of balance. It takes the income and it places it into your equity automatically. Okay? D says automatically backs up the data file. How do you have to set that up in order to actually automatically back up your data file? Okay, and you actually have to physically back up your data file. So the correct answer is C. All right, number 2. Okay, entering a date in the closing date field. I'm sorry, I cannot read today.
Which of the following?
Okay, yeah, of which of the following? Yes, thank you.
Go with C.
C. Okay, it locks the data file so that no unauthorized users can. Yes, that is the purpose of setting a closing date. It locks up the data file so that no one can actually place information in there. So there's no potential fraud that could be there. And little side note, who has access to be able to do this?
Accountant or the administrator.
Yes, the accountant or the admin can set the date, and they're the only ones that can actually lock up the file by setting a password. Okay, so yes, that's what the closing date does. All right, number 3, voiding and deleting transactions. Both do the following.
D.
C.
Okay, now this is a trick question because the keyword that you're looking is the word both. Okay, so so A, keep a record of the dates and information and in regards to the transaction. Now, when you delete a transaction, does it also keep a record of the information? No, it doesn't. Same thing with B. When you actually delete a transaction, it completely removes all the details. When you void a transaction, do you completely remove all the information?
No.
No. So this is a trick question here. So the question is, what can both voiding and deleting do? And C is the correct answer. It does, in fact, zero out the debits and credits in a specific transaction. Okay. So obviously D is wrong because B and C are more geared towards deleting a transaction versus both deleting and voiding the transaction. So C is correct. So trick question for you guys is that oftentimes the key to being successful to QuickBooks is trying to understand what the question is asking. Okay, so that's the trick portion there. You can read a question and interpret it in a million ways, but the main line is it's really simple. It's really simple when you read it. But again, as human beings, we end up adding things that we shouldn't add. So that's the only trick part, is read everything very, very carefully, but don't think too much about it. Okay. Number 4, to make an adjustment to items as well as their associated accounts, you can. C, $0 checks is correct. Okay, so it's not a general journal. General journal is only for accounts only. Okay? Fixed assets, obviously not the answer. Memorized transaction is obviously not an answer. So remember, general journal is used for accounts only. $0 checks is used for items only. Okay? Lastly, number 5, at the end of the year, you should perform the following.
C.
D.
D, all of the above.
Yeah, you're going to do all of the above.
Inventory, yeah.
Yes. Okay, so
Steps.
yes. Page 407 to 408 is going to be the 10 steps, and all of these are included in those steps. So D, all of the above is correct. Okay? So I'm actually going to stop here. Now, there are a few things that I want to kind of go over. So you guys let me know, just because tomorrow